educating investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom, how are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman here. I do the 10 o'clock show in the morning, 10 a.m. to 11 Eastern Time. That is the Tiger Conditions Hour, and my service here is the opening call daily newsletter. My pleasure to be sitting in for Tommy O'Brien. This is the Tom O'Brien Show on the September the 16th, or a Tuesday, Wednesday tomorrow. We get the Fed talk. So let's see what we've got here. We've got the Dow down 105 at 45,077. 46,137 was the most recent high, the all-time high. Now, I don't want to go through this now. It's not really necessary. In my show, I go through the Chapman wave notation and what we're looking at. I just want to say that there is nothing technically that I'm looking at in the Dow, the daily chart, weekly chart, or the monthly chart that portends anything sharply down. It'll have to be news-related. If it's news-related, then you have to see the Dow down every day for about 2 or 3 days, like a good few hundred points down, the S&P down maybe 68 to 72 points, and then having just whatever it is affects the market so negatively that very quickly it permeates the market. But then you will get the volatility index suddenly spiking higher. The quicker it spikes higher, the quicker you're going to be done with the downturn. So this is going to be a very interesting moment, because I just need to see the 46,137 high taken out for in the Chapman wave notation to get to a point where it's starting to get technically overbought based on my criteria. And so we're going to be watching this closely. The S&P made an all-time high today. Does it go from an all-time high to a sudden, very sharp decline? That has to be news related, because you don't see it anywhere. At least I don't see it in the technicals. I see it definitely. I'm ready for some kind of a pullback. So the subscribers, we're waiting for a pullback. We want to add to some of our positions, that really nice positions that we want to add to, because they're in the right area. But this is going to be very interesting, because there you are, just off the all-time high today of 6626.99. Well, Mr. Round number by 1 penny, and we're at 6613. Down 2.24. Within that context, you've also got to look at the QQQ. All-time high, 592.86 is trading right now just a little under at 591.77, down 9 cents. But it is a leg D, and just like the S&P in the Chapman wave notation, they are kind of ready for a little bit of a pullback. We're looking at the IWM as well, which is underneath the high of just a few days ago, 240.93. It's trading at 238.07, down $1.28. The all-time high is this amazing double top. Just look at this, how these double tops come to within a penny after being look, 244.46. That's November of 2021. Plunges down to 161, makes a beautiful cup formation, goes back to where? 244.98. Less than 50 cents away from an all-time high, and then it takes a real tumble. It comes down to the 170s, rallies back to where? Now it's just a few points away. It's like a cup and a handle pattern, a little jagged, but that's kind of the pattern I'm looking at. So here again, you want to see a high into the 241, 244 area over the next week, or If it suddenly takes out it's at 238 right now. If it closes any day under 235, let's make it 234. Give it a little bit of room. Then it says, got a couple of weeks, at least 10 days maybe, of at least a pullback. Now I want to go to the SMHs. The SMHs, the semiconductors, really important in my work. Semis lead us up, semis lead us down. Do I use this as a phantom peak to get to a leg D? We don't have to get into that right now. And then to say, all-time high today. 308.57 was the high. It's at 307.44 right now. Wow. I mean, that is really something, right? And the day, this is the daily, this is the weekly, strong monthly in all of these. So it has to be bad news. What would be the bad news? Well, look at the TLT. This is the iShares Treasury Bond ETF trading at a new recovery high. I can call that a 6-month high at 90.42. Up 29 cents. Therefore, the TBT, which is the mirror image, this is now the yields, down not quite, but almost at a new low. That's a multi-month low at 33.19. That's 3.319%. So this is going to be very interesting because the weekly chart pattern looks like it's arching over. That means the yields are going down. The monthly chart looks like it could be a failure pattern, that H pattern we often talk about. That means yields could go lower. So whatever happens, it's the words from the Fed. It's the outlook. It isn't just that rates come down. It's how they come down, when they come down, and what percentage is a half a point. What is it? That's the big question. Let's go to gold. Gold right now is trading, at an all-time high at 37.26.3, up 7. This is very interesting. The Chapman wave notation D. Look at this last D. This is where you often get quite a sharp sell-off. Will we get that again here? Well, you don't know, but I am looking at this and saying the technicals are still very strong. Here again, it has to be. Does the dollar, look at this. Let me finish the silver. So the silver is trading also at a new high. It's trading at 42.87, down 9 cents. 43.43 was the high today. We went through this in my show, The Tiger Technicians Hour. I show all these charts in great detail. And look at this. Here's the continuous. You've got to go all the way back to the high that was made back in 2012 to be at 42. And that's where we are. So I'm going to be looking to see, does silver have the power to push higher? Does it push lower? Does it make, what does it do? And the whole thing will, I wouldn't say really depend on, but I would say, look at this. This is the dollar. It's taken out. We were actually long the dollar from 2018. We got out earlier this year and said, no, the administration's, the premise has been since the first administration, the Trump administration, that you've got to have a lower dollar. It's really good for international commerce. And once we saw that, we said, well, once it made that 114.78 high back in September of 2022, it pulled back and then it rallied. And that rally looked like it was going to fail. We're out, we're done. And we're watching this going to lower lows. And it took out this key support at 100. And it's at 96.65. So does the dollar suddenly turn around and move to the upside? That's a big question. Have I forgotten anything? Yes, I have. I wanted to do the crude oil. Look, crude oil is having a pretty good rally of $1.19. We'll talk about that later. And here's Bitcoin. Bitcoin has been trading up 1,235. I'll be back. Basil Chapman, Tiger Technicians Hour. Basil Chapman sitting in for Tommy O'Brien for the Tom O'Brien Show. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. In a little while we'll be going to Tim Ord, but in the meantime, this is usually when Tommy interviews me. I do my show at 10 o'clock to 11 o'clock every market day. That's called the Tiger Technicians Hour, and my daily service here is the opening call newsletter that goes out every day, and on Friday afternoons I do an hour and a half a summation of the market, what we're looking at, what we've got, what we want to add, what we want to take away a little bit, just market overview, looking at the big picture and what we are doing in terms of our portfolio. I'll call it a portfolio. So let me just do that. So let me just show you something. I had a question just a moment ago about the GDX. So the GDX is the gold miners vectors market ETF. We have, for our position, we have physical gold. And whoops, where did that go? Let me just type it in. I probably typed it into the wrong place. PHYS. So that's what we typed. Yeah, we go. This is the Sprott physical gold units. We've been long since 20s, trading right now at 28.37. But most importantly, what we are looking at here is it's getting a little toppy just in terms of this particular indicator right here. This is that blue line called the on-balance volume. It basically adds and subtracts running total of price. And when it's being accumulated, it moves up. When it's being sold, it goes down. And you can see that in this particular chart, there is nothing here that is technically poor. The MACD, everything about it is very strong, and the stochastic is flat at 92%. That's really good. Here is the weekly chart, very strong. So this looks exactly the same as gold, so we've done very nicely. And the question came in, are you anticipating that there will be a pullback? Well, as I said, it has to come from the news because the technicals here are still very, very strong. This candle is a little doji candle right at the top, and this is the weekly chart, but we have to wait for Friday. So to sum up, we're going to take a little bit more off tomorrow in the physical, and then it's going to have to tell us. We have nothing that's wrong with it. It looks very good. Just on a very short-term basis, there's a case to be made that the GDX trading at 69.15 right now could pull back, and if it tests and breaks 66 support, that's going to mean a little bit longer time out. But so far, looking good. We have a silver stock, well, silver and gold, Core Mining, And our target, we're in from $7.92 back in May, and here it is, more than double, 16.39 down 54 cents today after having made a new multi-year high. The target that we had was 16.41. It did that yesterday, and today's pulling back. I have nothing here that's technically wrong, except once again, the on-balance volume says, be careful. Now, price will change the stochastic at 95% if the price takes out yesterday's candle. That was a huge move up. So I'm saying that yesterday's low was 15.20. If in the next few days, core mining CDE closes under, I would say 14.65. Give it all the way till next Tuesday, right a week. If it goes high, not complaining, but it is under other conditions that I'm looking at. Money management says that you should be taking something off. That's the most important thing. Looking out, now I'd like to just quickly go through a couple of things that we have a number of positions. Many of them are reaching multi-year highs as we speak. IAQ, which is this is the Global X Artificial Intelligence ETF, all-time high as we're speaking at 48.21. And we've been long this position, and we have an extra position starting at about 2029, and here it is at 48.20. We have Bank of America. We're waiting for it to get to the top of 2020. Here we go, 2021. 20 at 50.11. That was the high of February 2022. It's just done that. It's still acting pretty well, but I am looking. If people are interested in my service, I am looking at either adding or maybe even switching out to one of the more electronically, just more contemporary financial bank institution. And we'll see which ones fit. So far is the one that comes to mind, but I'd like a pullback. General Electric, we've had since 198, and here it is, an all-time high today of 294.74. We've got a little bit left. We've taken quite a bit off, and I'd like a big pullback for it to come back quite some. Robinhood is the same thing. We got in the 16s, and here it is at 117. It hit 123.44. It's still, I think Robinhood is one of the places to be. That's GE and Robinhood. The portfolio we have, I love, but I'd like a pullback so that we could add to these positions. Let's look at another one. We just got in, we have the Bitcoin. We have IBIT, which is there we go. IBIT is the iShares for the Bitcoin. And it's done very nicely. We're not doing anything. We've taken a little bit for money management, but so far it's still holding very nicely. I bet we're in at 38, and it's trading at 66 right now. Then we've got Microsoft. Microsoft we have down from the 338 level. We've run it all the way up. It's gone. We've taken lots off. It went to 555.45 in July, all-time high, and now it's pulled back. I think it's one of those that's starting to struggle. And until Microsoft really starts to trade at the 528 to 533 area, I think it's just kind of stuck for now, but it's still a fantastic stock. It's still only in leg B, peak B in the monthly chart. Should still go to higher highs, C and D. One that we got in just recently because I wanted something that if the market started to soften, we were into something that has the potential to find a whole new up mode over the next couple of months, and this is IREN, IREN Limited. It's formerly Iris Energy. This is in next generation data centers, renewable energy, GPUs, and it's really done well for us. We took a little bit off today. What was that? I think it was a 64% gain just in a week and a half, 2 weeks, and we want to keep that a good core position. So it's done well. Excuse me. Could it be getting a little toppy? Well, it hit a high today of all-time high 37.67. I would actually love to see it come back to the 31, 29 area, somewhere in that area, to make a decision whether to add back. We've got one that we've got the other day. We bought. We had this ages ago. It was fantastic. It went from the 20 or 19 area to 68, and then we got out, and we never got back in. Then we tried to get in and said, no, it's getting too difficult. We got in the other day. This is Symbotic. This is end-to-end AI robotic warehouse and automation systems. trading right now at 51.81. We got in at the 48 level, so it's giving us a little bit of a cushion. Had a round number. Was that? Oh, it took it out. Good. Oh, the round number was a round number opening today. Oh, I don't like round numbers when stocks are moving. It's important at that particular moment that it breaks that level. So I want to see 52 taken out quite sharply in the next day or two. But this is one we've gone back in, and I like it. Automation systems. I think it could have even another comeback. We'll see if that happens. And then we got one that's in the. I like to have prices all over the show for my subscribers. So if you want to spend less, you can spend less. Well, you can spend as much as you want, but the price is less. So this is real. This is the Real Inc. This is into the online resale and authentic luxury goods, buying and selling pre-owned design items. We got in the other day at $8.55, and it's trading at 10.05. So it's giving us a little bit of a cushion here. We'll see if we can raise the stop so we can protect our gains, but it's acting very well. I'll be back with Tim Wall straight after this. Basil Chapman sitting in for Tommy O'Brien. Dow's down 122, S&P's down 5.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Just before we go on, I had a question about Meta. What's Meta doing? Meta, what I'd said was, let me just find that in a moment here. Just before we go to Tim, I just want to say, Meta's still doing very well. Must hold 740 on a closing basis into Monday. Try for 782. Then it could test the all-time high. It's this Thursday's action is going to be very important. Actually, I'd say for most of the stocks, Friday. You want to see a follow-through of whatever happens Thursday. Does it happen Friday? Let's go to Tim Ord. Tim, how are you, Tim, from the Ord Oracle? How are you doing?
Good. Thanks for having me on again. Market's a little kind of wonky here. I was kind of, at one point, I was thinking we're going to pull back to around 620, which is basically the February highs. And actually, I changed my tune on that. I don't think we're going to do that. The reason why, over the last, I don't know, we've been on for, a couple of years, maybe 3 years now. And I kind of preached the panic situations on the trend and ticks. Yeah. And so anyhow, I listed that the ticks and trend, all those blue lines are when ticks and trend basically reach panic levels, and panic only forms at bottoms. And anyhow, so I colored that in pink where those ranges occurred, where the trend and or tick reached panic levels. And actually, on this last rally up, as it was rallying, the ticks and trend, in most cases, this case right there was actually, I should have been a bicycle. I was looking at some other stuff. But anyhow, we quit getting panic and tick readings the last 4 or 5 days. But if we pull back into that level again, anyhow, this pink area is the times where the ticks and trend reach panic levels, or at least one of the two did reach panic levels, and that's support area. And that support area comes in around 650 to 640. So there's really not much downside. So that's
just from a week ago, Tim. That's where we were just a week ago.
Yeah, just a week ago. So we're probably going to find support. The last time we did this, we kind of busted out here, and we went right back into that panic level. And that's pretty much where that market bottom went back up, came back down into the panic level again, which is this area, and market rallied up. Now created another higher panic level, again, 650, 640. So I don't think we're going to get down way down here to 620. I think this area of 640, 650 is probably going to hold. So there's not much downside. I thought about shorting the market, but what I'm going to do, probably the better trade, since momentum is definitely up because we're making higher highs, higher lows, I'm going to buy the pullback if there is one, and I think there will be one here. And somewhere in this vicinity between 640 to 650 is probably where that buy signal is going to generate. So once you get a panic area where the trend and ticks reach panic levels, going back into that area, normally you get panic again, just like this reading right here heading into that panic level right below it. It was a day early, but anyhow, it tells you that going into this area right here last time was a panic level, and you should be buying it. And actually, I did get long in this vicinity somewhere. It didn't hold that position, but now I'm getting quite a bit of confidence. Actually, it's flipped. This is another way to look at the ticks and trend. This one goes back, looks like about 2002 to 2024. But all the shaded areas, the bottom window is a 3-day trend. Next window up is a 5-day trend. Then you got a 10-day trend, which is most important. It's actually not 10-day trend. It's not 0.99. Actually, it's 1.15. You can't quite see it there. We're 1.55. So if we pull back, most likely we're going to get that trend up to around 1.2 on the 10-day, and that's going to be a buy signal. The 5-day did hit bullish levels here a few days ago, above 1.2, and the 3-day trend is really not that important, but the 5 and 10-day trend is, because the 10-day trend is basically 2 weeks of trading. The 5-day trend is a week of panic levels. So you get 5 days of panic, you're getting close to a low. 10
Can I
days
just ask?
Sure.
Tim, I just
Go
wanted to
ahead.
ask you, right now, the VIX index is up 62 cents at 16.31. The Dow's only down 151. The S&P is down 6 points. What is that? 6 points? 8 points. When last did you do your VIX reading today?
Yeah.
So isn't that interesting that the market's barely down? In fact, the S&P is almost unchanged, and that VIX is this? Do you think it's insurance or something for tomorrow? Does that correlate with anything in your work?
Yeah, it does. This is the SPY VIX ratio I did earlier today, and over the last couple, actually since when is this? So mid-August. This is probably about mid-August when the market was going higher and the VIX started peaking out, and it's really gone down. The SPY, this is a tilt ratio. I put the wrong chart up. I meant to put the chart up of the VIX, but the VIX was showing, this is for some reason that dropped off. Let me get it back. Yeah, this is, I meant to put the SPX VIX ratio. Did I? No, I didn't. Yeah, that was supposed to be up there, but the VIX is looking similar to the SPY tilt ratio.
Okay, good.
So anyhow, yes, the VIX is actually going up. Matter of fact, yesterday the S&P was up and the VIX was up. That's usually a bearish sign. And now we're pretty much unchanged on the SPY today, and the VIX is still up. So that's warning that a pullback. That's the reason why I think we're going to get back into this region of 640, 650. Maybe not this week because this week's option expiration week, but probably next week we'll get into that. And I think we'll probably end up in a buy signal somewhere, give or take 645. It may be in the top of the trading range or the bottom of the trading range. But this is the area where the panic tick readings happen. So I'm talking about this area right here. So that's where I'm probably going to end up with a buy signal. I still think it's a trading range. I don't think the rally is going to continue all the way into year end because September, October are basically the worst 2 months of the year, and they're back to back. So they'll probably go up, and the VIX will probably give a warning sign. Here's the VIX right now. You can see the VIX up there. Even though we're pretty much unchanged, the VIX is going up. So will the top happen today? The market may hold up until, since the expiration week. I wouldn't be in a hurry to short it on a Tuesday, maybe Thursday or Friday if we're still up here. We may get the pullback. But a minor pullback, nothing significant.
Very good. So let's come back because everybody's waiting to hear your next about the analysis on your next chart. This is Tim Ord, folks, from the Ord Oracle. And this is Basil Chapman sitting for Tommy O'Brien and the Tom O'Brien Show. We've got the Dow right now coming back a little bit, just down 120, and the S&P is down 6.79. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, we're back and we're looking at the Dow down just 132 points. S&P is down, down 6 points, and we're on with Tim Ord. Tim, what chart would you like to go to next? Unless you want to continue with the one you had.
No, we're going to flip to gold here. This
right.
chart is, where's the GDX? GDX is in the top window. This chart goes back to, looks like about beginning of 2006, so it goes back quite a ways. And momentum's your friend. So what I did have is the GDX up down volume cumulative. I think this is a monthly chart right there. It's a monthly cumulative up-down volume, which is the bottom window. Next window up is a cumulative advanced decline. So it's a momentum chart that measures the advanced decline cumulative and up-down volume cumulative, and that goes in the direction of the market. So when both those indicators are going down, it's a down market. When both are going up, it's an up market. And I use the Bollinger Bands to identify the up and down, I guess. Once this indicator falls below the mid-Bollinger Band on both those indicators, which it did back in 2012, remained on a sell signal all the way into, looks like about January 2016. Right. So that was a 4-year decline because declining, we're outnumbering advancing, and down volume is outperforming, down volume is outperforming up volume. So basically it's definition of a downtrend. So you get a buy signal in January. That lasted, looks like about 2 years. That's the blue area. Then you got a sell signal again, and it looks like about a year and a half, maybe somewhat in that vicinity. Then about mid-2019, you got a buy signal that lasted in 2021 of January. You got a sell signal, and that was the last sell signal in 2021. And you just got a buy signal here. It looks like approximately January of 2024. So now you're on a buy signal because advancing issues is outperforming the declining issues, and up volume is outperforming the down volume. So both those indicators are going up. So you're definitely in a bull market. So how long the bull market's going to last? Well, this one, 2012 to 2006, that was 4 years. Then 2021 to 2024, that was 3 years. So we've been at it right now a little over a year and a half. So can it go on for another couple of years? Yeah. There's no sign of a top yet by using this momentum indicator.
Tim, can I just ask you, what is the dash line? Is that an overbought signal, or just to tell you that that's where you last were? The top chart, and you've got the horizontal, the very top horizontal line.
This one right here?
Yeah.
That line is just basically the top of GDX in 2012.
Okay, that's okay. Good.
That just says that's just top. So what I want to point out, we're above the 2012 high right now.
Quite a bit
Because
above, yes.
Yeah, so that's the reason I put that line there. So it's just previous highs, whatever. So so we're way above. We're up around 70 or close to it. So where are we going to go? So you got to really look at the bigger time frames because the character of the market has changed. I was looking at a month and a half ago. I was looking at a monthly RSI above 70 have picked out the previous highs in GDX going back 3-4 years. Well, that has changed now. RSI has got way above 70, so that indicator's not working. It's one of the reasons why I actually went short GDX because of that indicator, another indicator, where both those indicators failed. So you got to go where the indicators are working. And this is one. This never gave a sell signal at all. It just momentum was going up. But, how far can we go up? Well, this is one indicator that can kind of give a clue. This is the weekly HUI gold ratio. And I marked the times going back to, look like about 2012, mid-2012. Anything below 0.12 was a buy signal on a bigger time frame. This is not met the day trade, obviously, because this bicycle back in 2016 started about 6 months earlier before the bottom actually happened. But once it did happen, you went vertical. And it peaked in around 0.17, approximately 0.12, give or take. And we're coming in around this indicator, 0.15 right now. So we got room to move higher until we get into this overbought area where previous highs have occurred before. And that's all these purple areas or blue areas. I'm a little bit colorblind. Those came at tops. Here's the GDX up here. That was a top. That was a top. That was a top. We're not near a top yet. But it kind of measured the valuation of gold stocks compared to gold. So if we get up to 0.17 to 2.0, will that be a top? Well, it could be. We'll have to wait and see when we get there what happens. But that's my opinion right now. I think we'll probably at least reach that area, if not exceed it, because it's going over back to 2013. So that's 12 years ago. It picked out quite a few tops in the past, so we'll see how that works out. But we're not near a top right now, so I think we have room to move to the upside on the bigger time frames. And here's another valuation. This is a monthly silver-gold ratio. Not the gold-silver, but silver-gold ratio. It just matches better to what the S&Ps or matches better to what the XAU is doing. And this ratio is still in a buy area. Anything below approximately 0.012 down to 0.011 or 0.010 is a buy area. And we're still in that buy area according to this valuation. If it gets up to around 0.18 to 0.20, you have previous highs in the gold issues. So anyhow, the 2011 high came way the heck up here. That was a major high. These are kind of minor highs, but anyhow, that's another valuation. So this ratio's got room to run. So that's not even near anywhere a high. Here's something I want to point out. This is maybe what's happening going forward on this is the monthly HEU to NASDAQ ratio. And it goes back to 1992. The data never really started until about 1996. And I wish I could go back further, but it appears to be a 12-year cycle. This is basically 2000 bottom.
Oh, isn't that interesting? Yeah.
Yeah. And then we had a high here of 2012, went down to 2024, clicked the bottom, and now we're going up again. And so I'm thinking the way this market's rallying, and there's a lot of formations that are on a lot of the gold issues. But anyhow, in a nutshell, if the RSI is below 50, then HUI is underperforming NDX. If it's above 50, HUI is outperforming DX. I put the RSI up in here so you can see as long as the RSI held above 50, yeah, the uptrend was intact. When it fell below 50, the downtrend stack. Well, right now we're above 50, and we could be in a 12-year cycle going higher.
Isn't that exciting? Wow.
Yeah, it is. So.
Yeah. Wow, thank you, Tim. That's really great information. Really appreciate it. So today being Tuesday, you'll be back with Tommy on Thursday, and everyone's waiting to see what happens over the next few days, especially with the Fed. So thank you very much for that information, folks. Tim Ord from the Ord Oracle. Check him out. Great information, as you heard. Thank you, Tim.
Equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and we're looking at the Dow down 80. So let me just go through the scenario. First of all, it's really best not to, you've got to prepare, but don't think that you know more than the market. The market will be the judge. At this time tomorrow, when the market closes, we will know a lot more, and we'll know about the bonds. Let me just quickly do this. Look, here's the TLT. The TLT of bonds looks like, so far it looks, why is it not good joining in there? Oops. Do I have a problem? I guess I do. I'll just do them separately. TLT. See, the TLT is at the higher end. That means that the TBT, the yields themselves, are going down. The chart looks like the yields want to come down. So it isn't just what the Fed says. It's the implication of other things that go with the Fed's statement. Right. That's number one. So as we look at it, it could be that we're looking at the dollar, which is just looks horrible. Maybe the dollar has a bounce. If the dollar has a bounce, then you'd expect that gold, is this going to work? Let's see, I'll try it out. Yes, the gold, which is at an all-time high as we speak, could pull back. But the way it looks, even if it pulled back, the 36.30 level, and here it is at 37.27, 100 points down, that's already major support. So we're going to have to watch to see very closely what happens. So I'm just saying, for subscribers to my opening call, we've had some really good gains, and I don't want to give them up. So we want to be at least looking at some protection tomorrow, maybe some insurance, maybe an alternative short via the one of the S&P inverted ETFs. I haven't quite decided yet. I've got to think it through tonight. But in the meantime, you don't want to spoil positions that are really working. So that's really what we want to work out now. So let me just make it clear. If the Dow, by Thursday, if the Dow is down over 400 or 500 points, that's serious. That means you've got at least 10 days or so, a week or so, 10 days of declining. Everything else is so far very strong. If the Dow and the others make new highs tomorrow, this time tomorrow, that's great action. So just be prepared, building up some cash over the last couple of weeks, and it's good to be able to